Welcome everyone. How we doing today? Hope everybody had a great day in the market. Pretty fun one for us, it seemed. Definitely a FOMO builder, that's for sure. Oh yeah, I did. I mean, I can only listen to idiots talk for so long before I gotta say something. 1K, how we doing? What a wild move, man. I hope some of you were able to catch some of that. There's plenty of not holding long enough going on today, but it's always better to follow the plan. Regret not taking an SOXL swing for this week. It's always funny when you look at the leveraged ETFs and realize just how bad of an idea it is to long hold these things. Welcome everybody. We're gonna give it a few more minutes. Likely won't be a huge turnout tonight. Trading psychology tends to not draw the biggest crowd, unfortunately. But definitely going to try to have this be a good discussion tonight. However many people we get here, great. Hopefully, we can get some nice participation from all of you. Oh no, you can hold calls or puts for as long as you want. I mean, the there's swings are a tricky thing to deal with, because the like what you really need to do is trade your plan, and so I mean, even if you have a month's time, you need to still have like a stop out planned. You need to have some take profits planned, like it's great to enter a swing and then have it go up a whole bunch or go down or whatever. But if you don't know what you're doing with it, you're already kind of shooting yourself in the foot. So I mean, yeah, it's just fine to hold options or whatever for a long time and trade them. I mean, I hold long swings frequently, but that doesn't mean my plan ever changes. My take profits might be a little bit bigger, but or my stop outs might be a little bigger, but it's all about just trading the plan. Yeah, I mean, yeah, that's a great way to do it. They're most people call them leaps. When you're trading year out plus contracts, they're called a leap. Well, nowadays, I don't know. Nowadays, we got people trying to say, "Oh, I'm in leaps," and they have like 3 months time. That's not a leap, but yeah, holding leaps for a year or whatever, it's great. You need to understand option contracts a little bit to uh, have it be effective, because the Greeks are still working against you, so that you need to think of it as more of just a leveraged bet with time. I always tell people, analyze the delta, analyze the theta, analyze those kinds of things, and you can say you can buy a leap for $1,000. Well, frequently, if you were to buy the same amount of shares to give you an equal delta, it'll cost you 3-4 times the amount. And so leaps can be a really good way to have like a leverage exposure to something. However, you still need to have some stop out plans. You obviously aren't going to say, "Oh, I'm in these year out contracts, I'm stopping out if the 15-minute candle closes under something." Don't trade them like that. But you can say, I'm going to close out if we get a weekly stop, or even a weekly close, or even a monthly close under a specific level. But don't just hold them blind. The most important thing is have a plan. No, break and retest cannot be on the same candle. Well, I mean that's sort of relative. Like, you can have a breakout and you can buy it when the candle comes back down, but 99% of the time when you look for a break and retest, you want to look for something like this, where we've broken out and now we have come back and we have retested it. You want to look for a setup like that. That's a real break and retest. But it can get a little bit convoluted. If you bump up the time frame, suddenly these trades look very different. But if you're just looking for a break and retest, you want it to break, you want some candle that closes, and you want it to pull back to your entry price. And never a stupid question or anything like that. It depends. Leaps are definitely, of course, good and easier to trade with a larger portfolio. But I highly recommend people with small portfolios quit trying to trade same days and strike it rich in a day. That's I mean, a leap is never, I can't say never, but 9 times out of 10 is not going to give you as big of a percent return, but the dollar amount will likely be much larger. So with a lot of safety. So they're a great thing. They're a great thing to do. And I see SoFi, AMC, and GME leaves. Love to hear it. At least 2 of those are going worthless. This one probably. Yeah, that one was a tricky one. That was fast. In just a second, and we'll get rolling here. Welcome, everybody. We'll just give it another second. Like I said, likely a pretty small turnout tonight, but hope not. Hope a ton of people show up. Try to tag them a couple extra times just to see if they will. Big week where trading psychology likely becomes crucial. I don't know, man. This is pretty tradable. I quit trading about right, I think right here, something like that. Oh no, right up here. I sold my QQQs right up here. well, this is SPY, but I sold my QQQs right up here, left for an hour and came back like right here and could not believe it. But this is great. I mean, it's not a huge move or anything like that, but man, you catch a $1.50 on SPY, you're styling. So welcome everybody. Happy to have you here. For anybody who doesn't know, I'm Dirty River. Thanks for being here. Tonight we are talking something that I really feel is one of the most important aspects of trading. And hand in hand with that, it is the most ignored aspect of trading. Something that I like to talk about all the time is that trading's easy. Like the ideas of trading technicals on charts, trading all of that stuff it's overall a very easy thing. We are the ones who make it hard. It's our psychology that gets in the way. And that's what that's what we want to talk about tonight. And like I said earlier, I really hope that we're going to have, a lot of participation from all of you guys. I'm going to try to ask questions, stuff like that of you. And hopefully we can kind of, make some moves on trading psychology. As most of I do a ton of one-on-ones. I spend a ton of time in DMs with people. I'm on trade floor every day. The number one issue that I see with people is their trading psychology. And it's not only applies to, before they're entering trades, after they're out of trades. It applies to all aspects of trading, just how they're thinking about the market, is just, it's so flawed. And so what I always try to teach people is, trade the chart, trade what's in front of you. An old thing I used to say all the time, trade the chart, not your heart. The market does not care about your feelings. The market doesn't care if you think, Tesla's bullish today. The market will do what the market is going to do. And so all we can do as traders is just try to trade what's in front of us. We see it all day long. Somebody even mentioned me yelling at the voice chat boys this morning. Like, they were trading horrible. They had absolutely horrible trading psychology. And it always makes you sad to see that. A lot of us in here, me, Toasty, all of us, Joe, we, that teach these classes every week. We try so hard to teach you guys, like just trade the chart. Nobody, like, you don't need to have your feelings. You don't need to be, posting all cap stuff on trade floor, being angry. Just trade the chart. That's all we can do. And so the biggest, how we deal with that is talking about our trading psychology. We aren't going to have one class on trading psychology and all of a sudden you're going to be able to just go and destroy the market. There's of course technical skills that are involved with trading the market, things that you'll really, we can teach and teach and teach, but they're things that you'll really only learn with time in the market. Trading psychology, however, is one where we can be aware of it and we can know our shortcomings, and we can try to work on those, actively all the time. It doesn't just have to be in the market. It can be anything. And so with that, I kind of like want to ask people, what are some things that they struggle with as far as trading psychology? I'm gonna, I of course have a little list of things that I want to talk about that really mess with people's, psyche and mess with people's bias. And so we're going to address those, but I wanted to start with all of you. Let's be real here. I know it's not super easy for all of you. What are some things that, you find yourself getting in your own way? Are you the issue? We all want to blame the market. Everybody wants to try to say the market's manipulated, but as my bio says, market probably not manipulated. You probably took a shit trade, pardon my language, but 9 times out of 10, your trade was bad. And it wasn't the market. It was something you did with your trade, something that your psych made you want to do. And so, yep. Wow, what's going on? Yeah, cutting losses, huge one. Yep, we're definitely, we're going to touch a little bit on that later. Struggle with FOMO, man, we all do, I appreciate that. Everybody does. I've traded for quite a while, as most people know. All of us do it. Tilio gets it. We all get it. I mean, both Tilio and I have messaged each other at some point over the last, couple of years and said to the other, FOMO's hitting me too hard. I'm done trading for the day. I don't want to make a dumb decision. And it's really funny that, FOMO, the fear of missing out, it's one of the huge things everybody feels. And 9 times out of 10, the answer is missing out. Don't take a trade. If you're feeling FOMO, walk away and you solve your FOMO feelings, and then you don't start tilting. You don't start doing dumb things that make you lose a bunch of money. This is one of those days. Big green candle, as you all know, I hate people buying big green candles, but it was a day where it worked. Well, second big green candle, all of a sudden, I had a couple of DMs from people end of day. Oh, I thought it was going to keep going. It's like, well, good for you, but the market ran, $3 in 20 minutes. You don't always think it's going to keep going. So the best way to deal with FOMO is actually miss out. Don't be scared of it. Just miss out. Walk away, do something else. Oh yeah, Sonny, that's a huge one. Stopping out and admitting you're wrong. As everybody knows, man, I beat that drum heavy. Admit you are wrong quickly. Everybody's wrong every single day. At some point, we all take stop outs. I was talking to one of the better traders I know this morning, and he had a bearish bias going into the day, and he got blown out of the water. However, he stopped out and he was wrong, and he admitted he was wrong, and he moved on. It's what we all have to do. And so much of that, and we're going to get into this later, trade psych, trade plan, they go absolutely hand in hand. Your psychology will always be a mess if you don't have a good trade plan. Moving stops too far in profit. Well, I'm never going to say that's a problem, because, if you let green trades go red, you're wrong. We had somebody in here one time. They said, I would rather, they tended to set extremely outlandish profit targets. And I watched them trading futures one day up $700 and let 700 go minus 500 because, quote, they would rather be right than green. So, I mean, yeah, don't get me wrong. If you're trailing some SPY contracts, don't get, $1, $2, $3 behind them, and you want it to keep going, but bump that stop into profit. The bigger deal with stops is that people don't, and I'm not saying you, but people don't understand how option contracts move. And so if you aren't aware of how the contracts move, it's very easy to get stopped out when really you were just trying to protect gains, but you put it a little bit too close. Yeah, Hash, confident in the analysis. And that's something that we talk about all the time. We actually touched on this a little bit in class here a little bit ago. And something Shark described it the best. And this isn't for everybody, and this isn't for, the super beginner that's still learning. But as you learn more and more and you start to understand charts, you start to maybe have a little bit of fundamental analysis of the market going with your charting. Shark said it best. You got to swing the bat. And there's a very fine line between, chasing and FOMOing in and just swinging the bat on a trade that, all your parameters are met. Sometimes you just got to swing the bat. You're one person, you and I have worked together plenty. And you're one person I know that, like, your analysis is getting really good. You're getting to that point where you got to take a swing. And something we all learn as traders is, as long as the plan is solid, you know where you're entering, you know where you're stopping out, you know where you're taking profit, nothing else matters, because you swing the bat. And if you take a loss, well, you knew you could lose $20. If you take a profit, you knew you could make $40. So the unknowns are they're taken off the table, which to me is, you just got to swing that bat as long as you got a solid plan. Man, the old chart name got nothing to contribute tonight. They're being unhelpful. FaZe, how we doing? Love to see you here, brother. Oh, Kelly, dude, we struggle with, we all struggle with FOMO. I mean, we can go to this QQQ trade I took. I mean, I was in, I think I took him back here. I was in some 426 QQQ calls. I think I took this break and retest here. I cashed them 44 bucks. Like I said, I left for an hour. I came back. They're at $420. Like you feel there's no way around it. Like you feel FOMO, you like when you like I left, whatever that is, 1,500, 2,000% trade on the table. Of course, I was happy with my 100%. Like you can never complain about 100% trade in a few candles. But you're gonna feel FOMO. I don't care who you are, you see that. But we all do it, and like, I mean, me and Tilia, as most of you know, like we scalp. We don't trade like the people on trade floor. Like we have very set plans. We take our profit when it's shown at the places that we think it should be taken, and neither of us hold runners. That's just not how we trade. And so you better believe we're gonna feel FOMO. I mean, even these ones down here, I hit SPY calls. I hit on SPY today. I hit SPY calls. Let me go to this one. Oh no, this one. So I hit SPY calls right here today. Cashed them somewhere up here. And yeah, you better believe that there's huge FOMO when SPY's up $4 later. But that's just part of it. That's just part of trading, unfortunately. And it sucks, especially when you like get to go back on the day and look like, wow, I basically bottom ticked it, and I don't remember. I got in somewhere down here. I don't remember where I entered exactly, but it was the reclaim of that hourly 20. But you're gonna feel FOMO. We all feel FOMO. Dude, when me and Tilia were in month out Nvidia calls when Nvidia was at 480 and we sold them the next day. That's just the way it goes. JT, yeah, I hope that's serious. I really wasn't trying to like pick on you. I was just trying to like explain some things to you. Sonny, yeah, taking profits too early. But see, I don't believe in that because, yeah, everybody's going to say, oh, I sold too early. We had no idea this was going to happen. I don't care who you are. Nobody knew this was going to happen. So if you sold at your profit target, there's no such thing as taking profits too early. Trade your plan. As long as your plan worked, then you succeeded. Like I was just saying, we all feel FOMO. None of us knew this was coming. It just happened to come. And so some people got lucky, some people hit it good. I mean, it is what it is. Yep, chart still annoying. Started with 1K FOMO real today on QQQ. Yeah, me and 1K were talking during this. And like, I mean, that was, like this happened. Oh yeah, this is SPY. We'll go back to QQQ. This happened and we were both talking, oh, nice gains. And then he asked me, oh, well, what's QQQ gonna, what are these contracts be at 426? I was like, well, we're basically there. So we sold them. And of course we're gonna feel huge FOMO on that. Exactly. It always just happens, it's a thing. Um, yeah, right. I know. Those big percentages are cool. Nah, Josh, because that's not how it works. Real world in the market, people, real like, and this isn't disrespect to anybody, but no, like real traders, and I don't, this isn't to be rude, but like real traders grow their ports 20% at a time. Nobody, no professional trader is looking for home runs, leaving runners. I mean, it'll get you fired from a hedge fund. Just trying to leave runners will make you lose your job at a hedge fund. One of the best futures traders that I ever heard, that one of the best futures traders, in my opinion, on the planet, he has a really famous phrase. He says, "I made my millions 3 points at a time." Sure, it's great to catch a 20-point runner on futures, but if it's not your plan, don't do it. Base hits are how ports grow. For everybody that hits a 400 percenter, they lose 20% on their port the next day. And so that's just a bit, real traders look for those little, just consistent gains. And don't get me wrong, if you got a big enough port and you just want to leave a runner, then great. But like, you guys watch Flip Straight all day. The dude grows a port better than anybody in here. And Most of that part growth, well, other than those like huge SPX end of days, most of those part growths are taking those trims at 20, 30, 40%. You know, he has one contract, sure, it pays him a couple $100, few $100 profit. The whole position makes him 1,000 because of those trims early, you know. That's the way to do it. Yeah, exactly. And that's all we can do is FOMO, is try to avoid it. You know, and that's of course going to be everybody's biggest issue with trading. It's always going to be FOMO, you know. But you just have to remember, think of the people that were holding spy calls for the breakout yesterday. They got smoked, you know, or the people holding the SPY puts, you know, oh, we got more, we're going to 420. And then they get smoked into end of day when market bounces, you know, almost $3 against them. You don't always get this. So you need to just ignore this. This is not the normal in the market. So you just ignore days like this. If you caught it, great. If you didn't catch it, who cares? You know, there's always, always, always more opportunity to be had. And so that's the best thing we can do. And so great conversation so far. I do kind of want to move on to some things that I think people really, really need to focus on. Yeah, and Josh, that's why it's best to talk about FOMO. Look at this move, say, wow, this move was awesome, and then ignore it come tomorrow, because you can guarantee people are going to be piling into SPY calls tomorrow thinking we got a repeat. Maybe we get it. Maybe we dump all day. Who knows, you know? But it's all about saying, hey, this was cool. Happy I got to see it. Too bad I didn't catch it. Maybe I'll get it next time. That's all we can do, you know? But the best thing we can do is just ignore it. And so with that, I kind of want to go on to some of the things that lead into people's, you know, bias and things on the day. And so some of the main things that I really recommend, you know, and I always tell people, you got to keep your feelings out of the market. And so what I mean by that is, you know, maybe you hate Powell and you think he's doing a terrible job. You know, wrong or right doesn't matter. You need to be worried about what the market thinks of it. And so that's why I always recommend people uh to ignore, you know, I don't want to say ignore the news, but ignore the biased news. Ignore Twitter. You know, the people on Twitter are wrong 9 times out of 10. And so you want to be very, very careful who you are getting your information from. Because if if you aren't careful who you're getting it from, then you will likely go into the market with a bad bias, you know, and you might, you know, you got to think about the Twitter bears, you know, all jokes aside, there are people on Twitter that have publicly lost millions of dollars shorting this, you know, and that's just the last little bit, you know, if we really want to zoom out, there are people that, you know, bears lost, no exaggeration, billions of dollars since the lows last year. And that's because they can't shake their bias. And to me, bias is the second, you know, it's the second biggest thing that people struggle with. You know, they go into the market, they think these like repeatable things are going to happen over and over again. Oh, you know, the market's going to crash, the market's going to dump, but they're getting their information from people who have little to no understanding of the market, little to no understanding of economics, and they're forming like bias based on opinion. So the best thing that we can do as traders is avoid those, you know, don't go listen to the talking heads on CNBC, because, you know, if the market's bullish, they're going to chuck Tom Lee on there and say, you know, oh yeah, Tom Lee, you know, he has his 5,200, you know, SPX target or whatever. Market's bullish, everybody buy calls. Or if the market's bearish, you're going to see, oh, Michael Burry loads massive short position, you know, is the market going to crash? Will he do it again? Well, no, he's, you know, like, who cares? We don't, you know, the last thing we need is to listen to CNBC talking about Michael Burry's short position after we've had one red day. You know, who cares? And so the best thing we can do is just ignore those people, stay off Twitter for sure. That's just the plague. For traders, Twitter is the worst place you can possibly be. I know there's some good traders on there, but unfortunately the ones who get all of the attention are not good traders. So you gotta avoid Twitter. When I say avoid the news, what I mean by that is ignoring you know, ignore CNBC, ignore Fox, ignore MSNBC, ignore them. But you need to be aware of news in the market, whether it's like, uh uh some Apple news or some AMD news, or somebody's getting funding, somebody's acquiring somebody else. Look at those things that directly apply to a stock you're trading, because you will likely have volatility around that. However, stay away from Twitter. Oh yeah, I'm happy you brought it up. Stay away from Reddit, stay away from all of that stuff, and you will likely start doing better once you kick that bias. We've seen it in here, man. People have been trying to short all year long, but they've been shorting with no understanding of what's going on economically. So we need to be very, very cautious of doing that. What's the best platform or way to follow all news in the market? Well, I asked Casey, if I'm going to be entirely honest, the lady in here, Casey Cobra. She's amazing. She has all the news all the time. So I asked her. But so you keep hearing about 10 o'clock news, and I'm happy you brought that up because people are wrong. So yes, there is absolutely some news is released at 10 o'clock every single day, but it's not news like people think. It is internal market reports. So it's news that we don't even see, we don't even know about, but it causes market volatility. It involves, settling of reverse repos, settling of bonds, settling of the MOO and the MOC orders. It's market internal stuff. So yes, there is, sometimes there's news, home sales or whatever it is comes out at 10, but we can see it basically every single day. I mean, mine's 7 o'clock, there will almost always be volatility when that happens because the algos pick it up. And it is internal news that people like hedge funds and market makers and mutual funds get. So they will make trades around it. So it's not, you won't see that kind of news pop up. However, if you don't ask Casey, another really good option is the Walter Bloomberg Discord. And then they also have a Twitter. To be honest, I'm not even on Twitter. I think it's such a waste of time. I don't even have an account, but they have another really good Twitter. And then if you're on Thinkorswim, there's this live news button right here. You can click on it and all the news is going to pop up for you throughout the day. Anything that, the people at Schwab think is important will come across the live news there. That Pelosi news is like the most useless news ever. I wish we would just stop talking about it. It was a terrible trade. All I see on Reddit is AMC and the next penny stock. Yeah, Reddit's useless in my opinion. Oh yeah, there you go, Hash. Yeah, you don't want to be MMA on that one. What about follow Pelosi? No, it's stupid. Her trade was bad. People just have no understanding of how the market works or understanding, how contracts work or anything like that. It was just a really, really dumb trade placed in a very dumb manner that provided basically no benefit and gave her bad publicity. No, I would never follow a politician's trades. Most of them lose. Like that Tommy Tuberville guy, that dude's down publicly like millions because his trades never hit. Pelosi got demolished last year on Nvidia, on Google, on Microsoft, on all of them. So everybody's talking about, oh, she's up 700 grand. Well, she was down 1.2 million last year. So she's not doing very good. And so it's just unfortunate that we have people on which this is going to segue us into our next thing. We just have people who won't shut up about unimportant things. And so, this is all going into trading psychology, going into bias. Ignore it. Nancy Pelosi has 50 contracts. That's it. 50 contracts. And people are acting like it's this crazy thing. I mean, if you guys like, just for fun, like if you guys are interested, do you guys want to see Pelosi's trade? Like you can see it. There was a million better ways to take this trade. So Nancy Pelosi took some end of December, and then she hit 120 calls on Nvidia, which is, it's an interesting trade because ideally when you would go deep in that money, you would get really big exposure to like leverage on the shares. Well, she went so deep in the money that the contracts actually cost the exact same as if she had just bought the shares. So she gave herself really bad publicity by doing this. So if we want to come back, let's see, somewhere right around here. Oh, here we go. Here is Nancy Pelosi's order right here. So this is Nancy Pelosi's order. We can tell because we can see the 50 volume. She is literally in 50 contracts. That is it. I know people think she's like controlling the market and stuff like that, but you have to look at this. She's in 50 contracts. Here's her entry, you know? So, and then right here, you can see that she purchased them about $38,000, something like that. And it dropped to $35,000, you know? So she was down $3,000 at one point. Well, now it's up here. This is a trade that is up 25%. That's it. It's a 25% trade on 50 contracts. There's nothing to talk about here. This isn't market moving. This didn't do anything. In fact, she got clobbered for a little bit, you know? So no big deal. We can ignore that Pelosi trade. It means absolutely nothing to the market. Like she put up, you know, whatever it is, $2.5 million to make a trade. Who cares? People do that all day, every single day in way larger quantity. So no point in worrying what Pelosi does. You know, I mean, maybe she'll be break even by the end of the year after her losses last year, you know? Yeah, Reddit will get you on Doji. Oh, dude, Michael Burry has only taken losing trades since 2009. I mean, he hit the big short in a terrible manner. He almost lost the hedge fund. Hedge fund was minus 60% on their portfolio at one point and ended up getting saved after he no longer allowed his customers to make withdrawals and doubled down the position. So yeah. Very little risk, yes, but technically speaking, more risk than shares, you know? Yeah, exactly. Who cares about Pelosi? Yeah, Nancy Pelosi's raid is clickbait. Yeah, shorted the real estate market. Yeah, and then like, dude, he shorted, you know, oh yeah, huge position in SPY and QQQ shorts. That shit, like, I mean, Burry shorted SPY like right here. People were like, oh, he's the GOAT. And then somewhere up here, they're like, Burry stops out a short position for massive loss. And so, you know, I mean, that's what it is. The guy doesn't know how to take profit, that's for sure. Okay, and so with that, now we're gonna move on to another thing that, you know, this is gonna be a hard pill to swallow for a lot of people in here. Trade floor in OOT, as should be no surprise to anyone, not a good source of news, not a good place to become biased on trades. You know, we have a good amount of members in here. Unfortunately, most of them spend no time on trade floor, no time talking on trade floor, none of that. And so that is because people are so opinionated. You know, I get a lot of DMs every single day about, you know, oh, this person talks a lot, or, you know, oh, this person said this and now I'm down money. Something that I recommend for anybody who doesn't know, whether you're new in here or if somehow just missed it the whole time, you need to be extremely careful who you take any sort of trade floor advice from. You know, there's some really good traders in trade floor. Don't get me wrong. Like we have some like shockingly amazing traders in OOT, to be honest with you. However, the loudest people are frequently not the best traders, you know? So you want to be very, very cautious who you're taking advice from. If you're new here, definitely stick to like those green names and maybe the yellow names, even though some of them are degens too. But them green and yellow names are going to be your friends if you're just joining. Over time, you will start to learn people that are worth listening to. We have some really like we got some awesome traders in here, and there are definitely people on trade floor that are worth listening to. Uh, However, there's a lot of people that you should never ever listen to. I'm of course not going to try to name anybody. I'm not trying to call anybody out. I just want to make it very, very clear that one of the worst places on the planet for any sort of bias or anything like that, one of the worst places that you can possibly go is trade floor. They have the trade floor is about their success rate is about equal with Bury. So be very, very cautious in there. Because I don't want you to lose money. I want everybody to be successful in here. We have some really amazing traders. Oh yeah, I see a couple of them getting called out in here. 1K, great person to talk to. Tony, great person to talk to. I mean, I've been working with 1K since you had 1K. Not quite that long, but we've been working together quite a long time. And so like I can very comfortably say he's worth listening to. Obviously, Toasty, some of those people, they're really good traders. They might not be active, they might, trade different than I do, but there's some very good traders in here. However, you still want to be very, very cautious of it all because, people get very, very opinionated. We unfortunately have these stocks on the market, whether it's Nvidia or it's Tesla or it's AMD, where people just get in their feelings. It's like Tesla. Great trade today, great long today. Tesla has put up oh, her name is KC, like the letters, KC Cobra. I put it in there. Uh, you know, uh, Tesla, great trade today, but you have all these people saying, "Oh, I'm bullish on Tesla. Tesla's going to 200." Well, the owners of Tesla aren't even bullish on Tesla themselves. They just put up a truly terrible earnings report after they had a truly terrible earnings the quarter before. So, don't get in your feelings. I don't care if you love Elon, trade the chart. Was the long trade on Tesla sweet today? Absolutely. I mean, I didn't hit it, but you don't let your feelings get in the way. Don't let those people on trade floor typing in all caps about Tesla running. Don't listen to them. Trade the chart that is in front of you. So that's kind of my little spiel on trade floor, and I love trade floor. Don't get me wrong, I'm on there all the time, and I make jokes too, and like like those people aren't alone. I do the same thing as some of them. But also, if I'm in VC or I'm in DMs, or if anybody asks me questions, I of course get very serious when it comes to people's money. And so just be very, very careful who you are listening to on there. Oh yeah, Eve is the goat, man. She actually hit some really, really good trades. They are a bit more expensive, but man, I know that she does tag people a lot. But I love her I love her analysis. I love that she tells you exactly what her plan is, and so I think that's a great tab. Plus she's nice, she takes the joke really good. Well, she has a bot that posts her things, but she is definitely a real life human. That's for sure. She is definitely a real life human. Okay, so with that, now we've kind of talked about, the things that, we feel biased about, or our trading psychology suffers from some of them. And so, now we can kind of move on to how do we apply this to trading, so like we've done the important steps. We've muted Twitter, we've muted trade floor, we've blocked like half of the members of OOT, and so now we're ready to trade the chart. So the main things that I always get asked about throughout the day, and we're gonna kind of do some overlapping we're going to do some overlapping things, a little bit of technical analysis, but how to apply it, to our trading psychology. And so one of the main things people ask me, because everybody's always trying to catch the top and catch the bottom and blah blah blah, and I don't care about any of that. I just trade the chart that's in front of me. Like none of that means anything to me. I don't care if I like bottom ticket, top ticket. Who cares? So something that I get asked about: how do I build bias going into the day? And so I should honestly just have this like be blank. So one of the main ways that I like to do it, and obviously the first place you should start on a long time frame. What is the market doing? Well, the market is basically going up. You can even draw a box, around any recent consolidation we've had. Something like this, obviously provided when we look at the shorter time frames, obviously provided great trade with breakout retest today. However, you want to start on that longer time frame. And again, we're ignoring trade floor, we're ignoring all those people. We can even ignore today for now. We've seen some consolidation, but we've definitely seen some tightening. So we're assuming a move is coming. Moves have been up, so we're assuming the move is coming up. Well, one of the next things that I like to do, and two tools that I really like to use for kind of forming, and I don't want to say a bias, because you can have this bias, but you very, very quickly need to admit when you are wrong. And so something that I like to use is VWAP, which is this pink line, purple line, whatever right here. And then the hourly 20 EMA is one that I love to use. And this is a generalization. And of course, trends change, volatility happens. So you always need to be willing to admit that you're wrong. But a nice rule of thumb, if we are above the hourly 20 and above VWAP, buy dips. If we are below the hourly 20 and below VWAP, short rips. You of course want to, get some levels involved. You want to get, trends involved, things like that. But that is a really, really great way to have, an overall bias on the day. We can see early in the day, like I said, this is where I ended up, somewhere right around here. This is where I ended up getting into SPY calls because, we were not breaking the hourly 20. When we finally did break the hourly 20, when that new candle printed, we were instantly above it. We were above it within 5-6 minutes, no big deal. So buy the dip on it there, of course, targeting VWAP and then targeting some of these previous highs. However, if this would have continued selling, if we broke back below it, well, yeah, we started the day above them. We are now below it. So you can kind of flip your bias. You don't want to do it, obviously, one candle close. I'm sure bears were celebrating this candle right here to just get blown out seconds later. You want to give it some time, but these can be a very, very great tool for, having that little bit of bias on the day. Just an idea of, because everybody always wants, oh, we're going to short it, oh, it's going to come down so big, or if we're dumping, oh, calls here, SPY's going to rip, I'm catching the bottom right here. What did I change on VWAP? I took off the upper and lower band. Those are actually standard deviations from it. They're fine, they're super ugly, but if I trade if I want to trade something that's deviations, I'm always going to opt for the B bands. Those are my preferred one. And so, that is how I like to build bias on the day. Seeing Gustavo, I'm happy for you that you made money on this candle, but you can see, for me, we were above VWAP and we were above the hourly 20 EMA. I wouldn't have shorted that. I'm happy that this news candle saved you, but I wouldn't have shorted that. I mean, I'm explaining to you right here that if we're above those, I'm looking to buy dips, which we ended up, breaking one, but we came above it and bought the dip on that. And other way, I'm happy you made money, but I'm trying to explain to you why I personally wouldn't have done that. And so that's a nice way to build your little bias on the day. And so once we have our bias on the day, then we can start actually looking for some trades and we can start to work, around that bias. So pull back, we're looking to buy dips. Now, how this needs to work, for these, this type of trading psychology to work for you is admitting you were wrong. Like I was just telling Gustavo, I wouldn't have been short. I actually might have been short up here, but I wouldn't have been short up here because you don't know what the market is going to do. And I was wrong. by saying you shouldn't be short up here, obviously I was wrong. The market proved me wrong right there. And so as soon as you are proved wrong, you need to exit longs. And this goes the exact same way. Ditch your bias when wrong. If you're, short down here and we start to break above all of these EMAs and EWAT and, EMAs crossing over VWAP, then look to get long and exit your shorts. That's the most that's the most important thing to do, is admit your bias was wrong and move on. And so that leads me into something that a lot of traders, the main thing we see, with trades going wrong, is traders start to tilt and they start to do dumb things. Maybe you shorted these lows. Maybe you don't trade the opening range. Maybe you don't trade the hourly 20 to see this reversal turning around and you see us bounce. Well, maybe you had an average of VWAP, and that's not good. I always explain to people there's a very fine line between an average and adding to losers. Tudor, he's a very famous trader. He had one of my favorite quotes of all time: losers add to losers. It's a fact, So maybe you average here because we're at VWAP, fine, whatever. We break above it, you need to stop out. Well, this is where working on your psychology is important, like Gustavo said, made good money here. People are still looking to get short. They're still looking to get short because they saw this candle, even though, it's like a 50-cent candle, 40-cent candle. They think shorts. So they short the bottom, get blown out, average, keep getting blown out, and average until all of a sudden what could have been managed is a very, very small loss. You short the bottom, you stop out 20-30 cents above you, no big deal, you were wrong, move on. Well, when people start tilting, they average and they average and they average, and all of a sudden they are down horribly on the day. And looking back saying, oh, why didn't I stop out? Obviously, what was I thinking? And well, you tilted, and a lot of people do that. And so again, shorts got an opportunity here to exit the trade. Well, eventually we were, back above this opening range. There starts to be no reason to be short here. We're holding all EMAs. EMAs are starting to push up, all of those things. So don't let your bias blow your port, because you're chasing a short you missed. And so that's what I talk about. It's the same thing over here. People who chased longs, they got smoked on same days into close. This is minus 100% type of move on some same day calls that you tried to buy at the top. And then this bounce ain't even breaking you even. You're still sitting minus 100% on your 492s you bought at the top, and so always be willing to admit you're wrong. We've had people out there that try to be short this whole time, shorten every pot, just getting blown out of the water because they can't shake the bear bias. And so, when we're trying to trade, we're, kind of start wrapping it all up, working on our trading psychology, block out news, block out Twitter, block out trade floor. Trade what is on the chart in front of you. Don't add to losing trades. It's one thing if you're entering a longer term trade and you have a plan to average down, but if you're realizing that you are having to average down every trade to make profit, you need to work on your plan. Something is wrong with your trade plan. Trades should work without an average. That's the idea. If you're having to average frequently, then you should likely be working on your plan a little bit. Then once you have, you have your plan set, your entry, your stop out, your take profit, then all of a sudden you're going to start finding a bit more success. And when you have a very good trade plan, it leads directly into your trading psychology, where if you know your entry, your stop out, your take profit, nothing is left up to chance. It's really easy to not start doing those things like adding to losers, tightening up your stops too tight, taking profit before you planned on taking profit, stopping out later than you planned on stopping out. Every one of those is, It's like I said, and how I started all of this in the beginning, trading is very, very easy. The technical aspect of it, we make it super hard. We're the ones who take losers. We're the ones who take, FOMO into trades that have already run. We're the ones that average down on those losers. It's not the market. We are the one making the bad decisions. And two of my least favorite things in the market is people averaging down trades when it wasn't part of the plan. And the other one is holding a loser that comes back for you. I am of course happy that you made money, but if you are in a same day contract or a weekly contract that is minus 50% and it goes back to green, I'm of course happy you made money. It is also absolutely horrible trading. You likely will not last in the market trading like that. You should never celebrate that. You should acknowledge the fact that you got super, super lucky. It wasn't skill. It wasn't good trading. It wasn't anything like that. It was nothing more than luck. And if you're depending on luck in your trading, then there's a very, very small chance that you last in the market. If you're just like, if you're just praying things are going to work your way, then we'll see in portfolio help and you'll likely be out of OOT shortly after that. And it's unfortunate, but trade with, half a brain, know where your stop is. And if your stop's minus 50%, then okay. But plan that in your trade, is going to be the best thing you can do. Let's see, when you have a mouse out, but you want the candle to fight till the close and it's at the EMA support level. So that's a tricky one, because as most of anybody that's been to all of my classes, they know that I will have a protective stop for if something goes like wildly against you, but I almost always use a mental stop. And for me, I really just want to see how the next candle is going to react. Something like this, say I was in calls, or something like that. This type of candle, I'm stopping out. I'm hard stopping out of. If my stop is like the 9 EMA or VWAP or something like that, it's getting stopped out way down here. This isn't going to be one that I wait for a candle to close on. However, if I've shorted VWAP, and I don't take my profit, even though you all know I get a 50-cent drop on one candle, I'm taking my profit. And this next one closes like this, I'm not just stopping out instantly. I'm going to let this candle play out. And as you can see, you get blown out of the water for a second. But if you were watching volume, they will almost always show up on a little bit of selling on something like this. So my stop out is going to end up being here. It could have been a dramatically reduced risk here, but I'm always going to kind of see what that next candle does. However, if you're short and we had a candle like this on this next one, I'm going to be stopping out when I see that volume just dumping into it on the buyer side, So mental stops do carry some inherent risk. And for most people, until you're really, really familiar with like analyzing volume, analyzing how the market is moving, those kinds of things, 9 times out of 10, you're better off just taking this stop. Like if you shorted VWAP here, and this candle closes outside of VWAP, you lost like $1 per contract. So no big deal. Just take it, and you can always look for re-entry. But for me, I like to, see what the market is going to do with the next candle before I just take that stop out. Okay, and that was really it for my trading psych tonight. Thanks everybody for coming. We ended up with like over 60. That was awesome. Makes me very happy for the trading psychology lecture. So if anybody's got any questions, we're done like 5 minutes early. Love that. If anybody's got any more questions, would love to go over them for now. If not, thank you so much for being here. I really appreciate you guys. You all take time out of your weeks every week to come listen to me blabber. So thanks for being here. Oh yeah, nice call, Kelly. FOMC this week. I'll make my usual post on it. However, if you don't know what it is, don't trade it. If you're worried about volatility, don't trade it. If you have trouble following your trade plan, don't trade it. That's going to be the safest thing to do. And then if you do decide to trade it, you need to listen to what Powell is saying. And if you don't understand it, great. I'll likely be in a VC talking about it. I normally am. If you don't know what he's saying, great. But if you're just trying to trade levels during FOMC, you're gambling. You aren't trading. Of course, we can kind of look for some rejection points. Maybe the market will hold you somewhere while he's talking, and then we'll get that bounce or that rejection off of the level. But it's because the market was happy to go there, and then they're waiting for the next buzzword to see if we're going to go up or down. So just be very, very careful. It's the most dangerous day in the market. Many people will lose a ton of money and a couple of people will make really nice money. So just be super careful. How do you get the opening range script? I think I got it pinned in my tab. If I don't, I'd be happy to send it to you. Somebody actually made it for me in OOT. And I have never been able to track down again who it was. They DM'd me and now I just cannot seem to find them. But I think I got it pinned in my tab for Thinkorswim. And again, thank you everybody so much for coming. Awesome turnout. Yeah, thank you everybody. I really appreciate y'all. Yeah, you have a good night. Good morning for you, huh? Okay, well, that is going to do it. Thank you all so much for being here. That was a great lecture. Love that conversation in the beginning. Hopefully, got to give you guys a couple of my feelings on trading psychology, and let's have a good rest of the week, and we will see you all tomorrow.